How to compute the chargeable income. Section 33, 1. Business expense has to fulfill all the following conditions in order to secure a deduction from the gross income of a business source. Each business source has to be accounted separately. The scope of expense refers to outgoings and expenses. The expenses have to be wholly and exclusively incurred in the production of gross income from that business source. And expenses. Outgoing would have a wider scope than expenses because it would encompass business losses due to theft, defalcation of employees, bad debts, etc. Expenses generally refer disbursements that come out of the trader's pocket and involve some sort of volition. Wholly and exclusively test. The meaning of 1. Wholly refers to the quantum of money expended. 2. Exclusively refers to the motive or object in the mind of incurrence, and the purpose must be the sole purpose. Incurred. Incurred means money actually laid out or money for which a legal liability to pay has arisen. Incurred has to be distinguished from mere provision. A provision of expenses would not be given a deduction because the contingent nature would be too uncertain to be fairly treated as an expense. Example. Long SDN BHD makes a provision for warranty claims amounting to Rm 15,000 for the year ended June 30, 16. The amount is charged to profit and loss accounts. This provision of Rm 15,000 would not be deductible in arriving at the adjusted income. The provision is merely contingent or an estimate of expense. It does not satisfy the incurred test. In the production of gross income, it is sufficient for a taxpayer to show the outlay was for the purpose of earning income, whether in the year under review or future years. There must be good connection between expenditure incurred and the earning of the income of the trade. Deductible expenditure. Section 33, 34, and 35 qualify for deductions, whereas Section 39 specifies expenses which are prohibited as a business deductions. Capital expenditure and revenue expenditure. Deduction for capital expenditure is prohibited by S39 of the Act, whether an expenditure is revenue or capital is being tested through the following: 1. Enduring benefit assets, 2. Fixed capital and circulating capital, 3. Identifiable asset, 4. Business structure versus process, 5. Initial expenditure. Interest expense. Interest expense on money borrowed, Section 33, 1a, provides that interest expense on money borrowed would be allowed as a deduction under the following circumstances: I. The loan is employed in the production of gross income. 2. The loan is laid out on asset used or held in that period for the production of business income. Rent. Mentioned in Section 33, 1b, rent would be accorded a deduction if it was a. Payable for occupying the land/buildings, immovable properties, b. Used in relation to the period, c. Incurred for the purpose of producing gross income of that source. Business income must have commenced. Example. A manufacturing company occupying a factory in SG Bulow. Rental expenses were paid on January 1, 16 to December 31, 16. The company, however, commenced the manufacturing business on April 15, 16. Thus only rental expenses from April 15, 16 to December 31, 16 is deductible against gross income from the manufacturing business. Repairs and renewals. Repairs and renewals expenses deductible under S33, 1, C, R, A, expenses incurred during that period for the repair of premises, plant, machinery, or fixtures employed in the production of gross income. B, expenses incurred for the renewal, repair, or alteration of any implement, utensil, or article so employed, other than expenses on such items which would qualify for capital allowance under SCH3, or any means of conveyance such as vehicles. Bad and doubtful debts. Section 34, 2, lays down the conditions for deduction for bad debts. Specific provision for bad debts would be given a deduction if a. Specific debtors are identified, b. The debts are partly or wholly irrevocable, c. Such debts had been reasonably estimated to be bad. A trading debt can be bad if any of the following occurs. The debtor has died w/out leaving any assets from which the debt can be recovered. The debtor is a bankrupt or in liquidation and there are no assets from which the debt can be recovered. The debt is statute barred. The debt cannot be traced despite various attempts and there are no known assets from which the debt can be recovered. Attempts at negotiation or arbitration of a disputed debt have failed and the anticipated cost of litigation is prohibitive or any other circumstances where there is no likelihood of cost-effective recovery. Employer's contribution to approved schemes. Generally, contributions to approved schemes made by an employer on behalf of an employee are deductible in computing the employer's adjusted income. The employee must be engaged in activities relating to the production of the income of the employer. An approved scheme in S2 to mean the employee's provident fund, private retirement scheme or any pension or provident fund, scheme or society approved by the Director General under S150. Expenses specifically disallowed by the Act, S39. Domestic or private expenses, disbursements, or expenses not being wholly and exclusively for the purpose of producing the gross income, capital withdrawn or intended to be employed as capital, any payment to any pension, provident, savings, widow and orphans, expenditure incurred to a business, withholding tax. Sums payable for the use of a license or permit to extract timber from a forest in Malaysia other than sums paid to state government or any approved body, lease rental, blocked. Input tax. Passage, input tax and output tax.